Dude, check this out. The double view. All right, guys, I got a new handheld double view so we can get the GoPro. It's going to be a little bit weird, probably a little shaky, but the reason I'm doing this is so that you guys don't just have to look at my goofy face while I'm making this content anymore. Who wants to see some wannabe rancher talking about money? Can already be a dry subject. Let's make it a little bit more exciting. We're going to talk about $1 million topics, how to build wealth, but I want to give you those $1 million views along the way as well. So you guys can follow along and probably watch something a little bit more entertaining while you're listening to things that you absolutely need to know. And today, we're going to be breaking down something that has been making headlines, which are the interest rates. All right, this is very, very important. And I want to talk specifically about the latest rate cuts from the Federal Reserve and what that means for the economy and, more importantly, for your wallet. So let's get right into it, folks. Everybody meet Froyo. He can be a little bit feisty. He's protecting our little baby girls there. So guys, guess what? The Fed just dropped interest rates for the very first time in 4 years, and people are buzzing about it. Now, the big question really is, how much are they going to be dropping, right? That was what everybody was wondering. And it turns out that they went for a much bigger move than expected. They've slashed the rates by 0.5 percentage point or 0.5%. So why is this such a big deal? Well, to understand this, we need to take a quick look back at why the rates were so high in the first place. And that started a few years ago when inflation started spiking. Remember that? I mean, gas prices went out of control. Groceries cost an arm and a leg. And it's been rough. And the Fed started raising those interest rates back then in order to start cooling things off. And they basically stayed pretty high since then. But now, Chair Jerome Powell, he is saying that it's time to ease up. And the Fed feels more confident that they can keep inflation in check while maintaining a stronger job market. And this is essentially them saying that we think we can have our cake and we think we can eat it too. They're hoping to boost employment and growth without letting inflation run wild again. And that sounds like a win-win, right? Now, what does this really mean for you? We want to translate all that because what we want to talk about is the impact on each of us specifically when it comes to loans, when it comes to saving, when it comes to the real estate market. Now, first off, if you're looking to take out a loan, whether it's for a home, a new vehicle, a used vehicle, maybe a business, this is going to be good news because lower interest rates means that borrowing is going to become less expensive again, and it'll cost you a lot less over time. So let's focus on mortgages because I think that's where most people are really going to feel it. Let's say that you're going to buy a house and you've got your eye on, say, $300,000 as a purchase price. And you're putting 20% down, which means that you're going to finance $240,000. Let's go ahead and break it down with real numbers, okay? Before the rate cut, let's say the interest rate on a 30-year fixed mortgage was around 6%. At that rate, your monthly payment for the principal and interest would be about $1,439. And after the rate cut, let's say the new mortgage rates dropped to 5.5%. Now your monthly payment is only about $1,361. Guys, meet our other chickens here. So that's a difference of $78 per month. Now, $78 a month might not sound like a lot. It's certainly not a life-changing amount, but let's go ahead and take a look at that over the entire life of the loan. 30 years over that time, you're going to save about $28,080. So that's enough for some serious upgrades, or certainly enough for amazing vacations or just some great investing. But what if we were to compare the rates that we saw a few months ago back in June? In June, the average 30-year mortgage was hovering around 7%. So let's take that same $300,000 home with a 7% mortgage. Your monthly payment would be about $1,596. So you compare that to the new rate where you're paying $1,361 per month. That's $235 in difference of your monthly payment. So over 30 years, that's going to add up to a whopping $85,000 $920. Now that's a massive chunk, and you can put that towards retirement, kids' college fund, or of course, lifestyle design like we're looking at out here today. So let's start to break this into sort of the broader real estate impact, okay? Because you might be wondering, well, that sounds awesome for home buyers, but what does it really mean for the overall market? And that's my other rooster that I introduced you guys to on a recent video. That's George. Guys, I'm going to be bringing you a lot of updates. We're going to continue to add new animals. I've got a surprise coming up in a new video. Make sure you subscribe to that. We took on some new little critters here at our growing adult petting zoo, I guess is probably the closest, most accurate description of this. And they're going to probably keep coming. So unfortunately, you're going to have to keep looking at me in more of these stupid hats, trying to pretend that I know what I'm doing out here. All right. But it is a blast, everybody. We absolutely love farm life, and we're going to start growing our own food. We've been doing a lot more of that lately. And I just kind of want to introduce you guys to all of that, you know, and show you how when managing your money the right way works in your favor, you're really able to build the life of your dreams. I'm a city guy living out here, surrounded by hundreds of acres, really no neighbors anywhere close to me. I run multiple companies here, and have managed to really live doing what I want, and I can do it whenever I want, and I can travel when I want to, and I'm able to stay there as long as I choose. Everything can be done mobile. And if you just practice what we talk about here on this channel, you guys can build your way to this too. And it only took me about 6 years to accomplish this when I put my mind to it. When I got started, I had over $600,000 worth of non-mortgage business related debts that were pretty daunting. And it's not that I don't believe in debt and using leverage the right way. I believe in the borrowing power that we all can benefit from. But most people just simply do it wrong. They're focusing on consumer-based items. So subjects like this, when we talk about rate drops, this is really important to people like me because we're able to benefit from proper use of debt management and how to beat the banks. All right, so when rates drop like this, right, it can really, really heat up the housing market. And more people can then afford homes because their monthly payments are now lower. In fact, I just got 3 offers on a rental property. It's my final rental that I'm selling. And I've talked about this on other videos, why I'm selling it. I'm even paying almost $150,000 worth of capital gains tax. Going to be painful. But I'm able to put the proceeds of what's left, which is going to be just north of $200,000, into investments that can make me substantially more money than my landlording was. So it just makes sense. So make sure you check the playlist below for that stuff, okay? But here's the thing. When rates drop, lower rates can make homes more affordable in terms of monthly payments. But rising home prices could actually end up offsetting some of those savings, especially in areas where housing is already really in short supply, which we're still seeing. And on the flip side, if you're already a homeowner, you might be thinking, is now a good time to refinance a higher interest rate you may have gotten over the last 18 months? And the answer is absolutely. If you locked in a mortgage at, say, 7% back in June or 6 or 8 months ago, today's lower rate might actually save you tens of thousands of dollars over the life of your loan. You just have to weigh it against the closing costs of actually acquiring that new loan. So in a nutshell, this rate cut by the Fed, it's aimed at boosting the economy without reigniting inflation. And for most of us, that means loans, especially mortgages, are getting cheaper, which is great news if you're looking to buy a home or to refinance. But with more buyers potentially jumping into the market, we might also see home prices rise in response to all the extra demand. Like I said, no offers for 3 months, suddenly 3 offers in 1 day on my rental property, scheduled to close in October. So really this is a delicate balance, but the takeaway is this: if you're in the market for a home now, this might be a great time to lock in those lower rates before the prices start climbing again. And if you're already a homeowner with a higher rate mortgage, it might be worth looking into refinancing and locking in those savings for the long haul. All right, guys, that is it for today's video. I hope this breakdown helps you in some way. We'll keep you up to date as more financial breaking news comes out. We're going to help you with all of your cash flow maximization hacks on this channel. I'm going to be making a lot more content, and I'm going to try and make it a lot more fun and kill two birds with one stone by getting a little bit of exercise. Hopefully the wind doesn't make these walk and talk videos less frequent than I'd like, because I'm sure all of this is a lot more fun to look at than me just sitting there as a talking head. So make sure you're a subscriber. Drop a like if you like this new content. Comment below if you have any suggestions. I know that this isn't exactly a gimbal that's stabilizing me on the frame. However, the GoPro side of this handheld is hopefully making the view really nice. And you can see up there all the colors starting to change. Fall is in the air. This is the Collegiate Peaks, folks, named after a lot of prestigious schools. That right there is Mount Princeton, famous in this area. And yeah, this is my property, and it's not much, but it is my dream home. Guys, I was able to pick this home up for $610,000, if you can believe that. 5 acres surrounded by hundreds. And like I said, we're gonna have a little more fun on this channel, maybe a little bit more chit chat before and after, and show you guys some of the animals as we get them. They can perhaps kind of grow up in front of your very eyes. And the snow will be here soon, so I'm gonna try and enjoy this nicer fall weather while I can, because getting outside and chatting with you guys once the snow starts falling, certainly going to be a different experience on this end of the camera. So I appreciate you guys always showing up for us. You've been an unbelievable part of my life. We started this channel back in 2011. Certainly not the fastest growing channel out there. Certainly not the most viewers, but boy, are you guys amazing. The loyalty, the comments we hear from you guys regularly, how you've implemented what we teach here and how it's changed your lives. It makes all of it, it makes it worth it. And this isn't always easy to do, because I got a lot of stuff going on between my various companies, and I want to help you navigate all these difficult changes in this precarious, volatile economy that is making decisions related to personal finance so much more difficult. And with all that being said, I'm going to sign off for the day. Thanks for letting me babble for a minute, and I'll look forward to seeing you on the next video. Until then, guys, make it a great day today and keep on cash flowing. Take care.